Brokers Alliance and the National Insurance Clearinghouse present the Business Insurance Zone, a Bravo video event. Broadcasting in HD 1080p on Vimeo, YouTube, the Insurance Newsnet, Agent Navigator, BrokersAlliance.com, and on Facebook, LinkedIn, Twitter, and the Insurance Forum. And now your host, the whiz of the biz, Steve Savant. Well, welcome everyone to the Business Insurance Zone, the talk show that spotlights insurance in your practice, keeps you up to speed on insurance news and products, features insurance strategies from top advisors. Get in the zone, the Business Insurance Zone. Well, our email address is thebiz@brokersalliance.com, and you can call me at 1-800-290-7226, extension 147, for any of your quotes on life insurance, DI, LTC, annuities, or group pension plans. And remember, everyone, I'm not a tax or legal advisor, so if you hear anything on our show, please feel free to check with your CPA and your attorney, and of course with your broker-dealer compliance department. Today, we're specializing in a whole idea that's a concept that most of us are licensed for, but we're not really taking advantage of it, and it's called disability insurance. But we don't call it disability insurance on this show anymore. We call it paycheck protection. And with that, I want to introduce our head of our division of disability and nationally recognized disability expert, Marcy Pruitt. Welcome to the show, Marcy.
Thank you. Glad to be here.
Well, you are the diva of disability.
That's right.
All that is disability is Marcy. And if you want to talk to her, if you hear her, you say, boy, I really think she knows what she's talking about, you'll be able to write her at marcy@brokersalliance.com or call her toll-free 1-800-290-7226, her extension 126. Well, Marcy, we have a lot of brokers, a lot of advisors that do a great job in life insurance, annuities, big planning tactics like estate planning, business succession planning, retirement planning. But when it comes to DI, it's kind of a lost art. And I'm always asked, what can we do to make our practice distinctive? And I always say things like sell something distinctive. And when I think of that, I think of paycheck protection, better known as DI in our business. Give us a little introduction into DI. What's it all about? Kind of take the myth out of it.
Well, it is as simple as paycheck protection, Steve. Truly the cornerstone to sound financial planning is protecting your income. And so many advisors are placing other products like you mentioned, but without an income, you have no financial plan. So the importance of making sure that you are laying that foundation and protecting the income that makes everything else you do possible, it's really as simple as that.
I'm thinking if people aren't doing this, if advisors are not selling disability, maybe we think it's just too difficult a concept. There's a lot of definitions, there's a lot of legalese, a ton of writers. I mean, you really have to kind of know this product and so forth. It seems like a lot. I think what we're going to try to do in several of the shows that I have had you on before and so forth, and if you want to see some of Marcy's teaching, which we have posted out, basic entry level on disability, you can go out to agentnavigator.com. You can come to our archive. We'll hold it on our on-demand section. You can watch some of the basic entry issues to kind of get your feet wet. And this show is kind of expanding on those kind of educational videos so that you can kind of expand your practice with us. We're going to try to unbundle it in a couple of shows here and just try to really put DI, paycheck protection, front and center of your practice. Because again, we're all looking for marketing anomalies, distinction that separates us out of the pack. I think DI could be that.
Well, it can be, and we really want to simplify it. Most agents and advisors, again, are not promoting it or talking about it with their clients because of the fear of the unknown. They don't want to look bad if they don't understand all the definitions. So for us to decipher it and demystify it and really make it as easy as possible to understand and provide that support to help them sell this with their clients.
Well, when I'm looking at the statistics, I mean, I'm kind of amazed. Some of these statistics, like I would not have thought, honestly, that a 25-year-old would have any kind of numbers as far as what's the possibility, a chance of becoming disabled at 25. I mean, when I was 25, I just remember I was a crazy guy. I probably wasn't not very mature at the time. 44% probability of becoming disabled. Now, I'm sorry, but that stat shocks me.
Well, and look at all the extreme sports and things that people do today and travel and whatnot. I mean, and absolutely that's not even counting the illnesses and all the other issues that can happen.
When I'm looking at these numbers, now, of course, it starts to grade up as you get older. Interesting enough, around 45, it starts to drop. There's this probability it starts to drop a little more. I guess as we get older, we get a little more mature, right? And so right around the 55, and let's just, for most of our agents who are baby boomers, members of the ARP Nation, this is your probability. You're probably going down about 27%. That's your percentage. You're probably going to have a disability. Now, I had a disability years ago, Marcy. I didn't know if you knew that. I tore my left Achilles tendon off in a tennis match. And I was down for 9 months because at that time, the medical technology, I was an athletic person. I didn't see it coming. I'm playing tennis, a non-contact sport. But out of nowhere, I tore my Achilles tendon off, and I was down for 9 months, and I got a disability check every single month. And if I didn't have that, I would have burned through my 90-day savings, which we're all supposed to at least park. Now I think we should be talking 6 months, maybe a year, right?
Right.
But when I'm looking at this, if a person's disabled 1 year and that person is, let's say, 55 again, he's going to be out. It's 81% of the time. He's going to be down for over a year now. So I'm looking at statistics that we have compiled. And what are the chances if the disability has lasted 3 months, how long will it go on? And you know what I'm saying?
Right. And a lot of them are short-term in nature, 2 to 4 years. Statistically, if you're out for 5 years, you probably are out for most of your working career. However, we don't have the crystal ball. How long will we be disabled, and for how? So policies typically are sold to age 67.
A lot of people say, I'll just take Social Security. If I become disabled, I'll just do Social Security.
Good luck.
We'll talk about that.
Well, Social Security has a very strict definition. It's a 5-month waiting period. You need to be unable to work in any capacity and/or expected to die. And 70%.
No ONOC here.
Yeah, no ONOC.
Okay.
Close to 70% of the claims are denied at first blush, and then there's an appeal process. But it can take a long time. I mean, there's a backlog, and it's very tough to collect on Social Security.
When I think of clients trying to protect their earning ability, I generally punt to life insurance. If I'm not there, I want my family to be protected. Pretty easy concept. But I don't think we're thinking in the multidimensional way of planning in the bigger picture, which is the odds of you dying. In fact, I think it's still true. Less than 2% of all term life insurance ends in a claim, right? Part of it is replacement, part of it's lapse, but a lot of people just don't die. So if we have a high longevity, our mortality, we're living longer.
Right.
I'm looking at paycheck protection as being now a whole nother area. It's reinvented itself. I mean, it's really not the same DI I came into business with 25 years ago.
And that's true. It's insurance is a risk. We all plan for those risks, and you have a plan. And your plan may be you're not doing anything with it, but if you become disabled and lose that paycheck, a whole lot more goes into it than when you die and you're not around to see the fallout. I mean, it's living death.
How do I bring this up in a client? Like, let's say I'm in a first contact scenario. Well, let me back it up. Let's do a client that we already have. So he's comfortable. We've already had a couple of transactions together. We've done some planning together. Now they hear our show. They hear you discuss this. How would they introduce paycheck protection?
Well, there's a lot of ways to cross-sell, and it costs about 6 times more to find a new client than to cross-sell your existing clients, by the way, as well. And the closing rate is much higher with an existing client. So in today's market, it certainly makes sense. The cross-selling from whether it's health insurance, it's life insurance, the cliche, life insurance, you had a heart attack, it didn't go far enough. What happens? So really just the fact that you're half covered, whether you have the health insurance and we're looking at higher deductibles today and HSAs and $5,000, $10,000 deductibles. Well, if you're able to meet that high of a deductible, it's likely that you have some condition that may also disable you. So life insurance, the same. The statistics, as you mentioned earlier or on another show, what percentage of people die during that tidy term period they buy life insurance for? Well, it's less than 2%. It's a very low ratio versus the statistically chance of you becoming disabled during your working careers.
When I'm looking at kind of introducing our audience, our advisors today to disability, and I love the us kind of knocking it down to retail language using the word paycheck protection.
Right.
I want to protect my ability to earn. I want my family, my ideals, my concepts of my kids getting educated. And with as many daughters as I have to plan for weddings,
Right.
and the cost of those weddings. So all in, we have to make sure our bills are being met. And this is one of the greatest neglected areas of planning. And yet I have sophisticated registered investment advisors that listen to our show and have no DI in any of their clients' plans. I'm sorry, but that just shocks me.
Right.
And these are very good advisors that really understand full-blown financial planning. Part of financial planning is indemnification. Indemnification usually is, well, I'll do life, maybe even long-term care. But I think DI is the forgotten insurance. And how can that be when it's really paycheck protection?
Well, and most advisors simply do not talk about it. And, the easiest way to bring it up, as you just asked, is if you were sick or hurt and could not work, would you still need a paycheck? Where's the money going to come from?
I would need a paycheck,
right.
Of course.
So where will that money come from?
I'll have to burn through my savings account.
And how much and how long will that last?
For most people, 90 to 120 days, if the stats are right.
Right, exactly. So that's, the policy design to design something affordable. As you mentioned, a lot of policies are unbundled to just design something, even if it is a short-term 2 or 5 year benefit period, that's better than nothing.
Mm-hmm. If we have to, probably I would use the word almost, where we're opening as a gatekeeper to indemnification centers, we're opening up areas of client protection, indemnification. I mean, this is an insurance show. We're trying to get our advisors to think through, how can I market? How can I penetrate? How can I cross-sell? I think DI could be the new way in, to be honest with you. Well, coming up in our next segment, we're going to talk about the underwriting aspects of disability. It's certainly not like life insurance, I'll tell you that. Remember, you can write me at thebiz@brokersalliance.com or call me 1-800-290-7226. My extension is 147. Marcy's is 126. When we come back, we'll talk more about underwriting. I'm Steve Savant. You're listening to the Business Insurance Zone, a show that focuses on insurance in your practice. We'll be right back after the break. Steve Savant here. For years I've heard that less than 2% of all term life insurance ends in a claim. That's not many, and clients had to die to receive the benefits. That's the old term insurance. Now start selling the new term insurance. The term insurance that covers your client through a chronic illness, a catastrophic event, or a terminal diagnosis, and pays their monthly premium during extended periods